Welcome to the Money Mastermind Show. Let's talk money.
Welcome to the Money Mastermind Show. I'm your moderator, Glenn Craig, and this is the illustrious group that make up the Money Mastermind Show. We have Kyle Prevost, Miranda Marquette, Peter Anderson, and Tom Drake. This evening we have a special guest, Steve Stewart of the site MoneyPlan SOS. And welcome, Steve.
Hey, thanks for having me on.
Well, thanks for coming. We really appreciate it. Steve is here to help us answer today's topic. Can you get by in life without credit? And if you could, would you want to? So I want to throw out a quick fact I found here. According to an article that I saw on credit.com via Experian and Teleview, the average American credit card balance is $3,779. That's the balance. And that's average. So obviously, some people have everything paid off every month, but that also leads a lot of people that have way more than that, I'm sure. So that begs the question, can we get by without credit? Steve, I understand this is in your wheelhouse here. So if you'd start us off, can we get by without credit? Is it possible?
I believe so, even in this day and age with all the electronic, and mumbo jumbo that we got going on in the industry. I believe that you can get by, and it's not as if you were living off the grid. I do believe that you can simply get through life paying for things with cash. You can borrow money without having to worry about a credit score, and I'm sure we'll talk more about that later. So yeah, I do believe that you can get by without credit.
Okay. What are some of the ways that we can get by without having credit or a credit card? If you don't mind listing a few out.
Oh, sure. Well, like I already mentioned, cash. Cash is still one of the major payment systems in the world. Obviously, the U.S. dollar is so big over here. We don't have a problem using that almost anywhere we go. It is getting rare to find a place that doesn't take an electronic payment like a credit card. But a debit card works just like a credit card, so I can pay for things with my debit card, comes right out of my checking account, just as if it were cash. So there's that way. Obviously checks are still a possible payment option. All those are dying off very quickly. So it's not too difficult to get around without credit. And the big argument is keeping a hold of the credit cards, but that's even getting to be easier to live without these days.
So for the audience, I think debit and credit cards, they've become so similar lately that people just kind of throw out the terms kind of willy-nilly here. What are the differences between a credit card and a debit card so that people really understand this in case they're confusing the two terms?
Sure. And anybody can jump in. Feel free to jump in. I don't want to take over the whole show here. Primarily, a credit card works as a temporary loan from a bank, and it could then, of course, become a longer-term loan if you don't pay it back right away. With a debit card, you have three options on how it can be used. One, you can use it in the credit function, so it operates just like a credit card, goes through the same approval process for Visa, MasterCard as a credit card. The money doesn't come out of your checking account immediately. It might take 2 or 3 days for it to actually come out, but there's a pre-authorization there. Another way that a debit card is used is the ATM function, where you actually go to an ATM and put in your PIN number and pull it out. And then the third way is the way that I use it the most, which is I just, when I'm going to a place and I swipe it, I will put in my PIN number if it's a place that I trust. And that works almost in between the two. As an ATM card and a credit card, it goes through an approval process, but then it comes directly out of my checking account. So there are some differences besides that with credit card and debit card, and that is that some of the protections may not be there if you're using your PIN number, but if you're using your debit card as a credit card, as I said, going through the processing system, then they have the exact same zero liability policies, at least the Visa and the MasterCard branded cards are.
And that's something that I think has changed a little bit over the years. I know when debit cards were first really getting popular, you didn't always have that credit backup on them from Visa and MasterCard, so everything had to be a PIN transaction. So there was a big difference between the two back then. I guess the field is closing a lot between them. What is what would you say is a big advantage to using a debit card over a credit card?
The biggest advantage is that you're staying out of debt. There's no opportunity to go into debt. The only opportunity you would have to lose any type of money is to go into overdraft. But if you're living on a plan, which you should be if you're using your debit card to pay for things, then you're not going to have that problem.
Okay.
Now, I'm sure you're going to get to the point where we're going to start talking about credit scores and your credit report, and it will affect that. I guess some would say in a negative way, but we'll get into the discussion on that, I'm sure.
Yeah, we're definitely going to touch on that, and what happens if you don't use credit, basically. Can we go maybe back into a little bit on what the protections are and the differences when you're using that PIN transaction? So that's when you're making a transaction, you're going up there, you swipe your card, and you have to put in your PIN code. You have to type that in. So nothing can come out unless you're putting that in. It's almost like going to the ATM at a cash register, if that's what you're doing.
Yes.
But I think what a lot of people don't realize is that even though these days most debit cards have some backing by a Visa or MasterCard, when you do that PIN transaction, it's a different type of transaction. So, I think one disadvantage of using that particular type of a transaction with a debit card is that your protections aren't quite the same.
Right. Except there is going to be a change in October. MasterCard has extended the zero liability to include ATM and, the PIN transactions. So that's going to be interesting to see how that pans out. What I think is going to happen there is that MasterCard, the way that that vendors are charged the swipe fees, it's more expensive for them to pay for the swipe fees when it's a credit transaction than a debit transaction when you use your PIN number. So I think MasterCard is just going to say, okay, it's going to be 3% across the board. There's not going to be any discounts for debit because we're now extending the zero liability to include the PIN transactions. I don't know for sure, but I can kind of read the lines and beneath the lines, and I think that's what's going to happen.
So then it would be up to the industry to match that, or to at least just offer that to all the consumers.
Right. The burden's going to come in higher prices.
Interesting.
Right. And right now, when you're going to shop at a local business, a lot of times they'll give you a discount if you're running it as a debit or if you're paying cash. And sometimes you even do it that way just to help them out so they don't have to pay the higher swipe fees and so forth. But, again, there's always the you don't have as much protection that way, and maybe if you're not familiar with the business and you're not as sure about having your card number stolen or something along those lines, that might make it a little more iffy. So,
yeah, I've had in the past I've had two instances where I've found fraud on a card. One was on a credit card, and one was on a debit card. For the credit card, it was a waitress who got a little overzealous with the tip. And luckily I found it, and I had the original receipt, and I called up the credit card company, and they immediately put a freeze on that charge and then looked into it. The other instance, and this was a long time ago, was I had a monthly fee taken out for a gym that I was part of, and somehow or some way someone else got a copy of that, and I had some fee taken out that at the time I was really kind of living close to paycheck, and it really kind of wiped out my account at the time. I was able to get it all back, but it certainly made things very stressful for at least a couple of weeks there.
Right.
Yeah, and the thing I like about, I know Steve's about ready to get angry, but the thing I like about using the credit card is that very thing is that because, for instance, actually this morning, this very, very morning, I got a call from one of my card issuers talking about a fraudulent purchase that they thought was being made. So they were able to stop the transaction immediately and, we'll get a new card issued. When that happened with my debit card number being taken, the money was taken out of my bank account. And the hard thing about that is it's out of my bank account, and it can take up to 2 weeks or more to get that money put back in. And so that's the hard thing to me and about, using the debit instead is, getting that money put back into your account. Your money is now out of your account and gone. With the credit card, as Steve pointed out, it's kind of like a short-term loan. None of your money is gone at that point, and they can just freeze the transaction, reverse the transaction, and none of that money of yours is gone. And that's one of the reasons why I do like to use credit cards, is because of that experience of having it yanked out of my account and just the nightmare of having the money put back in.
Well, can I jump in here on that? Because I actually put a question out a couple months ago to the listeners of my show and out on Twitter and Facebook, and I was asking people who have had their debit cards compromised to contact me. And I wanted to interview them about their experience. And I've had this happen between my wife and I. We've had 3 debit cards compromised within a 2-year period. And I interviewed 5 of them, and that's actually going to be the next podcast that I put out. The next MoneyPlan SOS podcast will be about, when your debit card is compromised, what happens. Every single one of these people that had their debit cards compromised had 0 money lost. They had 0 overdraft fees that they had to deal with. The bank took care of it all. The worst thing that happened to them is they had to wait a couple days to get a replacement debit card. So it may have been that way 5 to 10 years ago, but these days, they're almost the same. Debit cards and credit cards are almost the same. At least in all of the experience that I've witnessed and talked to with people that I've interviewed.
Yeah, and I think that, that's kind of a good point that you make, because, that emotional impact of not having my own money in my bank for, because somebody had, used my debit card, that impact, and it was more than 5 years ago, and that impact has really stayed with me. That emotional impact is like,
Yes. And I can agree with you.
And that really stuck with me, and so, I'm a hardcore credit card user now just for that reason.
And you make a good point there also about the emotional impact of spending cash or having your cash stolen. When it's your own money coming out of the account and somebody's stealing that money, that feels like you're being violated more than the credit card company's money's being stolen. By the same token, when you're spending with a credit card, you don't feel the pain as much when you're spending with that credit card either, and you're more likely to be spending more with the credit card. I think what's the figure? You spend 12 to 18% more if you're using a credit card, in part because you don't feel the pain of seeing that cash leave your hand or your bank account. So you're kind of pushing it off until a later date. So
I want to say one thing about that, though. I mean, I've heard that stat, and obviously it's not for everybody, but it probably does apply to a lot of people that you end up spending more with a credit card. But another thing I found is if you have cash on hand, you tend to spend it. Now, this is my own personal experience, and I don't know if you guys feel the same way. I used to carry a lot of cash on me all the time so that I could always pay for something, and I wouldn't necessarily have to hit my credit card. So I'd have like $100 on me at a time. And what I found was it was just easier to spend that cash. That cash kind of burned a hole in my pocket. And what's interesting is over time, this is more of like through my wife than anything else, because she usually doesn't have that much cash on her. I started carrying less and less cash, and then I found that I was spending less and less, because if I only had like $5, all right, I can't go into the store and just spend it. So it's not always just a matter of the plastic that makes you spend more. Sometimes if you try to use cash, it depends on how you're using it, because you can still end up spending more with it. So, I mean, I think that maybe, Steve, you could talk to this, but what type of person or what type of preparation does a person need to have in order to be able to use cash or debit rather than credit? Like, what type of planning does a person need?
You're saying cash over credit or debit over credit, or
well, like
debit or cash.
Yeah, how do you need to plan your finances ahead if you're not just going to swipe a credit card?
Well, we can always jump into the whole, using the cash envelope system, which really does trick yourself into spending less than what you plan, because you're limiting the physical envelope in your hand is limiting what you can spend. That's very helpful. When you're walking around with cash in your pocket, just like you said, Glenn, I have the same problem. I love snacks. I love getting an iced tea at the store and all that stuff. So yeah, I do nickel and dime myself with some of those transactions. So you've got to be mindful, but what you can do then is just not carry as much cash around as what you're willing to lose. Just like a gambler shouldn't walk into a casino with too much more money than what they're willing to lose. So I guess you could limit yourself. I never get more than $20 out of the ATM at a given time. I just have to start to spread those trips to the ATM out a little bit longer, and I'll be doing even better.
And I'm going to make the assumption here that those trips to the ATM are all within your network, so you're not paying a fee each time.
Yeah, absolutely.
And I think I want to also mention that, when we talk about using credit versus debit, if you're carrying a balance and you're paying X percentage every month, you're already pretty much behind. I don't know that it's as much of a question then, because you're spending too much. You need to already do something, right? Mm-hmm. You don't want to keep digging yourself into that hole. So any system you could come up with where you're not spending more on your credit and paying interest, that's something you need to look into. I think a lot of the question maybe then is, for people who are paying off their credit cards every month, what are the benefits versus using a debit card and a credit card?
Well, that's just it. It kind of comes down to responsible usage. If you're going to use a credit card, you don't want to carry a balance, obviously. Like you guys have kind of talked about how people tend to spend more, apparently, with credit cards. But I look at it as I watch that balance just the same as I would watch my checking balance. If I'm going to spend $1,000 on my credit card that month, it's no different than I only have $1,000 in my checking account. I can't spend more than that. So, but I realize there's lots of people that pretty much look at their credit card availability as free spending money and then get stuck carrying a balance. But just responsible use can make them pretty similar.
Yeah, I agree, Tom. Credit cards don't kill bank accounts. People kill bank accounts.
Tweetable.
You can set up like on mine I have for every $500 that I put on the card, it sends me an automatic quick email, so I'm always aware of what my balance is. I usually check it anyway, but it would be a good feature for people to have a problem with that sort of lose it. I do understand, I guess, the nature of trying to keep things like just giving yourself the safeguard of using only cash or debit, but I don't know. With 91% of Canadians carrying a credit card, I think that's an uphill battle. I think we'd be better off focusing on how to allow people to use those credit cards safely. I think that should be like an extreme, like cut the cards completely. That's sort of an extreme thing that we should say for extreme people, in my opinion, my experience.
So, Steve, who do you think that's really for? Who should be a person that would benefit most from just using debit or cash?
Who would benefit the most? Somebody
Right.
wants to be more efficient with their money.
Okay.
I think it comes down to that. When you think about it, if you're paying for things with your debit card and cash, you've simplified your life rather than trying to juggle maybe 2 or 3 different types of reward cards. That simplifies that process a bit. The people who really are living paycheck to paycheck, they could definitely benefit from sticking with cash and debit because they're forced to try and live within their own parameters, which is, what the income is that they bring home. So they're going to be the ones that benefit probably the most because they're going to be able to control what they do have and get them out of that situation a little faster.
Yeah, I could speak to my own experience back in the day when I had a lot of credit card debt. It's really easy to spend and it's really easy to get that extra little item. And I think with credit cards, and just spending in general, it's not the big purchases that always kill you. It's the little ones. Like for me, It was always buying a CD. So it was like $15 here, $20 there. And next thing I know, I had a big credit card bill. I mean, it wasn't all that, but that was a good part of it. And when I started getting serious about getting rid of that, it was more about, look, this is what's in my account. And that's all I can spend. For somebody that's transitioning.
Sorry.
I'm sorry. Go ahead.
I was just going to say, and then as far as rewards cards, we talked about how people who use credit cards end up spending more. Well, there was another study done by Consumer Reports, I believe, that found that people who were using rewards cards actually ended up spending more than people who had a regular credit card. And beyond that, there's another study beyond that one that said from GMAC Mortgage and Harris Interactive that found 41% of rewards card holders either rarely or never even bother to use the rewards. So in many cases, people are juggling these, 1 or 2 or 3 or more rewards cards trying to get these rewards, play this game, and then they're not even, redeeming those points or whatever it is. And a lot of them are ending up, rolling their balances over or getting late fees. And I found this myself this last week, actually. I have one credit card, or it's a rewards credit card, and miscommunication between my wife and I, we ended up not paying it accidentally. We got a late fee. We had put $2,500 on the card, and that one late fee basically wiped out all those rewards. Luckily, I got them to reverse the fee, but it's made it pretty clear to me right there. You make up one little slip up, or you roll the balance over for 1 month, and a lot of those rewards that you're getting are basically disappearing into the ether. So,
yeah.
The part you said about people spending more with rewards cards, that really doesn't surprise me at all. I'm in the grocery industry for my day job, and we have a rewards program. And one, it's for loyalty that people come, but two, we're increasing our basket size because we tell people, buy this extra item and you get more points. And so it certainly leads to more spending.
There's a little bit of correlation and not causation there too, right? Because your upper end rewards cards need to have a decent income to even get them. So that, like, obviously if you have more income, your lifestyle spending is going to be higher. So there's a little bit of a correlation causation debate with that one, but it makes sense, especially given Tom's experience there.
So let's go back to something you mentioned before, Steve. Credit history and credit scores. A lot is made out of those and how important they are. If you ever want a loan, that's the first place they're going to look. And credit scores in history are used for more than just loans. You want to rent an apartment, they might check your score and history. There's been cases of jobs that need it. I remember I once was getting a cell phone and they asked to check my credit score first. So if you're not using credit cards, how does that affect your score? I mean, is that a drawback, or are there ways around that?
It's funny. In preparation for this, I did something that I don't do very often. I actually pulled my credit score. Usually I monitor my credit report, but I actually pulled my score to see what happened. Now, 2 years ago I pulled it. It was like 769. And in most places they say that's a good score. That's a myfico.com. It was a TransUnion report. So that wasn't too bad. Now, I still had some things that I, history of payments in the past that kept that decent. So I thought, okay, a bunch of it's dropped off. What's my score now? Pulled that up, and it was even up a little bit higher. But that's unusual because I have no debt except for our mortgage, and so it's gone up a little bit. Now, at the end of that, it gives you some tools that you can play with. And I was playing around with one of them, and it said, okay, what would happen if you were to, and they suggested take out a credit card. It jumped the score like 30, 35 points, and it was just a $500, limit. That's all it took. Everything else changed it very little or dropped it. I mean, store credit cards, refinancing a mortgage, taking out a mortgage, even up to $1 million didn't change the score that much. We put a lot of emphasis on building that score. So, what is the components of a FICO score? It's all based on debt and how we use debt and pay it back. So if you stop using credit cards, if you stop borrowing for cars, if you pay off your student loan, then all of that algorithm that your credit score is based on is going to go away. So I know that once we pay off this house, we've only got 18 payments left. Once the house is paid off, my score should just dive, and hopefully it disappears to where, I don't have a score. I've got the perfect score. It's 0.
I love how you talk about, letting it dive. And most people, I mean, that's completely opposite, of course, of what the credit industry wants us to do, and what most people want to see is this dive in your credit score. So I think that's interesting, but I think for some people, I mean, how practical is that? I'm getting ready to move across the country, and it's a good thing I've got a good credit score, because that apartment, the apartment community we're going to be moving into, wants, credit scores from both my husband and myself. And without good credit score, we'd be living in it wouldn't be as nice an area or as nice an apartment community. We would have to not get what we wanted if we didn't have the same score. So I think it's kind of, how do you practically live in this kind of world that does this?
Well, let's qualify what a good score is. It's 700 or more. Right. And if you have any debts, you should, if you're paying your debts on time, your bills and your debts on time, you'll have a good score.
Right.
Now, if you have debts, it could simply be a credit card that you're using. That's going to help that score remain at that, what I'm going to call at the bottom level, which is a good score. Now, if you don't have a score, why should you be judged any differently just because you haven't borrowed money? Why does that mean anything? I mean, it's not like you're living off the grid. It's just that you pay cash for everything. And so why should you be discriminated against because you don't have a credit score? Nobody in this room is recommending that you have a bad score. A bad score is determined by how, late payments, missed payments, things like that. Nobody's recommending that. Pay your bills and your debts on time. You should have a good score, good enough to qualify for an apartment, good enough to qualify for a mortgage. Maybe not the greatest interest rates on a mortgage, but at least a mortgage. And it's not going to be one of these subprime loans. And that's my belief system, and I'm seeing that in some of the people that I'm coaching with, that, you could live without debt and still get by.
I guess the question that I kind of have then is, you talk about, not having a score at all, having no credit history to speak of, and having no score. I mean, how do you deal with a world that sometimes, not always, but sometimes will actually reward somebody with a poor score better than somebody with insufficient credit history?
What do you mean by reward with a poorer score?
Well, because in some cases, like when you're getting some types of loans or certain types of loans, they'll actually look and say, oh, well, even if you have like a, fair to poor score, like something in the low 600s, you're actually at an advantage as compared to somebody who has insufficient credit history. When they get up there and they say they don't have sufficient history to assign you a score,
Okay.
somebody with kind of a lower credit score, kind of in that upper 500 to lower 600 range, actually has an advantage over somebody who has been living responsibly, for years, but they don't have a credit history. They don't have sufficient information to have this credit history. So they may be more responsible, but it doesn't really benefit them. What are some of the tools that people can use to then kind of, build that, history or show that they're as responsible? How can people do that?
Okay, I think what you're getting is, how do you prove your credit worthiness when you don't have a FICO score, a credit score? Yeah. Well, there's for the purposes of getting a mortgage, it doesn't exist much, but it's still out there, which is manual underwriting. It's a tedious, long, expensive process for mortgage lenders. They don't like to do it because it's tedious and expensive and it takes a long time. Now, there is a company that can help prove creditworthiness with things that aren't debt products. The company's called eCredible, and I just love what they do. And this is a new thing that's coming out that didn't exist 5 years ago. So what you do is you open up this account with eCredible. It's kind of like entering your stuff into bill pay. You just list your electric bill, your cable bill, your cell phone bill, which, by the way, are not on your credit history. They're not on your credit report, so they don't help your credit score. But if you don't make those payments on time, they hurt your score. I see that as being unfair. But they will then, when you want to apply for a mortgage, or if you want to apply for a car loan or something like that, if you want to prove your credit worthiness for whatever reason, you contact them. They manually verify that your payments have been on time for however many, 2 years, I think is what they look back into. And they will then provide whoever it is, the lender, the landlord who you're trying to rent the apartment from, they will provide them with a password protective access to this report to prove that you're creditworthy, that you're responsible, as you were saying. So there's an answer to that now too that didn't exist a couple years ago.
So for sure, it seems that the FICO scores, the credit scores, they are biased towards people who use debt more or use credit more, right? So
yeah.
It isn't quite fair.
Well, it's easy and it's cheaper for the lenders. It's easy.
Yeah. You understand why they use it. Yeah.
Yeah.
Sure.
Yeah.
It's just unfortunate that everybody else relies so much on it that you're almost a slave to the score, at least at this point. Like you said, there are other factors that are coming into it, and people starting to realize that there are things where if you're paying every month, they're not showing up on that credit history, and it's kind of not fair. Like if you're paying rent, that doesn't necessarily show up, right?
Right.
Bob down the block that you're renting from, he has no interest in reporting what you're paying to the credit bureaus. But you had mentioned mortgages, and if you qualify for a slightly higher loan, a couple of points, that's a lot of money over the course of a mortgage. to be dinged. So, not having that good score, for the most part, it might not have a big effect, but over 30 years in a mortgage, that really could add up to a lot.
Sure, but then again, we got to go back. What is a good score? I don't know what the difference would be between someone who has a 705 credit score and an 805 credit score. I don't know what the difference would be for a mortgage. I don't know. I haven't tried.
I think the big dividing line, I guess, here is between those with insufficient history to get scored and then somebody with a score. One of the things that struck me when I spoke with Steve, who, not you, Steve, but
Steve Ely?
Yeah, Steve Ely.
Yeah.
Yeah, incredible Steve. Was he did point out that, the mortgage partner they work with the Credible does charge a higher rate of interest. And so that can get expensive over time. But, once you've established yourself, like you were talking about, you've got your mortgage, you've got what's considered a good score. Once you've established yourself over time, then you can refinance, to a lower rate, I guess.
And are we talking about this mortgage as being a huge number, or is it going to be about the right number? Because if you have a decent score, or if you've got no score, how much of a difference in interest rate is there if you've been responsible this whole time? Maybe you've got a nice down payment. Maybe you get that monthly payment down to a reasonable level so that it's not a big burden. So the interest difference between, one point rate or another, maybe it won't be as much.
Kyle,
killed this
discussion.
Yeah, no, I was just wondering, Steve, is like you mentioned you have mortgage debt, so obviously you're not like an absolutist when it comes to this. Is there any other type of debt that you would, I guess not recommend people take on? Obviously they'd stay debt free in a perfect world, but is there like sort of a continuum that you're okay with, like student debt is sort of over here, or debt to buy a car, or investment leverage debt? Just a quick idea of how you feel about those types of debt.
Wow, this has really turned into an interview with Steve, isn't it?
That's what you're here for, dude.
Well, you're the only one that has really interesting views here. Yeah. The rest of us, we know how we feel already. So
that's why we would bring guests on, because we're boring.
Yeah. I dislike having the mortgage, but I can understand because it is such a huge purchase. When you're comparing a $150,000 house purchase to the next largest purchase, which is usually a car, maybe it's the student debt, but there's a gap. It's a huge amount of difference. So I can understand someone wanting to take on a mortgage, and I did it. And I did it before I understood how money really worked. So I'm not going to fault somebody else for wanting to get into a house, start building that equity, as long as it's reasonable. It's still debt, so we still want to pay it off, but there's other things in life that we should be focusing on first, which is making sure we've got that emergency savings and killing off the consumer debt, and then maybe building some retirement savings or kids' college and things like that. So I'm not an absolutist like you said because of the mortgage, but pretty much everything else, I try to teach people not to go into debt for anything else. And I don't recommend going into mortgage debt, but like I said, there's going to be a point where maybe somebody wants to get into it. It's a well thought through process.
So we have a question here, and for anybody that's watching, you're able to ask questions on our event page. But we have a question here from Chris, and he is from Dadrenalin, and he's asking, is it okay to use a credit card for just business travel? So, you're running a business or maybe you're part of a business. You might not want to always use cash because you might have a cash flow that fluctuates a lot. So, is business a completely different aspect than maybe your personal finances as far as going cash only? Is it okay to use a business card?
He's asking, is it okay? Is he asking for permission? Because it's really not up to me.
Yeah.
No,
I need an angel on my shoulder.
No, I know Chris. He's a good guy. So this is an interesting question. Is it his business or is it he's traveling for somebody else's business? It's up to them. It's not something that I can convince somebody to get away from using a credit card for. It's a personal preference. So if you all want to keep your credit cards, I'm not going to try and convince you any way other. I just want everybody to know and understand what the differences between the two, and you can make your own personal choice from that.
And I think you just made a good distinction right there too. Is the credit card on a big corporation's dime where they're like, you know what, you've got this limit, go ahead, just expense us later? Or is it something that you're running and really you're going to come up against the same issues as your personal finances? So if you go crazy on a credit card and you own a business, you still have to get to that point where you got to pay the piper and make sure that that bill gets paid, because really, who wants to run a business and then you have to pay interest on that as well?
Right.
I mean, at least for me, that doesn't seem fun. I use a business credit card, and I try to use it on things that I know I just need to spend. I mean, I'm probably cheaper with my business card than I am with my personal card. So, Steve,
go ahead.
I was just going to say, for somebody who does want to transition to using debit and cash more often, I think there's maybe some myths or people believe certain things about needing to use credit cards. Like if you want to rent a car, you need to have a credit card. In situations like that, is there anything valid to those, or is it really just not the case?
I think it's not the case any longer when you're talking about traveling and needing a credit card, because my family and I, we've taken trips all over the United States, and we haven't had a credit card in 6 years. We just got back from a trip out to the mountains of Wyoming. All done with cash, all done with check, all done with debit. It can be done. It takes a little bit of planning, but most people spend more planning their vacation than they do their investment accounts and their retirement accounts anyway. So take it a little bit further and just go ahead and pay cash. Now, there is some other places where people say that, you've got to have a credit score. Miranda was talking about renting an apartment, and I think we might have we broke up there a little bit, and I think you might have been getting into it like qualifying for a job or something like that. Did you bring that up already?
No, the score isn't for qualifying for a job, though. I mean, they may look at your history, but they're not going to look at your score. Well, they shouldn't look at your score.
Right. And that's another problem I think that there is with the whole credit industry. This perception, at least the perception, maybe it's not the credit industry itself, but the perception that you've got to have good credit to get a job. And I worry because, there's people who've had their credit compromised. They put a freeze on their credit, and this guy who wants to hire Joe over here can't get to see what the credit looks like, so he doesn't hire the guy. Is that fair? It doesn't seem fair to me. Again, we really need to be thinking bad credit versus good credit or no credit. I think there's two camps there. There's bad credit, which nobody here is recommending, and then there's good credit or no credit, and we're all on the same page there until you get to the credit card reward points.
Because we all love our credit card reward points. Don't take my credit card reward points.
So we have a whole diverse group of us here. I think we know Steve's general stance on using credit cards. Is there anybody here that has a real strong use for credit cards, or just a real strong preference? Is there something that you get out of using a credit card that's like, you know what, this is really what I want to use it for, and this is how I'm using it, and it really works for me? Would anybody want to speak to that?
For me, I just like the ability to, like, I do so much stuff online. It's so much easier with a credit card. Plus all the perks. Like, I've got a couple of really good cards that have all sorts of insurance and warranty extensions, and of course the rewards themselves. Again, I pay my balance every time, so I'm not really paying anything. Hopefully, I'm not spending more than I should because of it. But there's certainly a lot of perks that I think make it worthwhile.
Anybody else use anything that's particular to a credit card that really works for them, and they wouldn't necessarily want to give it up?
Well, we were talking before the show. Steve was mentioning when Paul Pant and I were on his show, and we were talking about our awesome airline miles. So, yeah, I mean, Paul was talking about how she never pays for a flight anywhere ever, and she pays off her credit card, and she never has to pay airfare, and she travels all the time. I certainly don't travel that much, but when my son and I went to spring break, one of our plane tickets was paid for with credit card reward miles. So, I mean, it's just kind of, nice to have those perks. And like Tom was saying, as long as you pay off your balance, and you're not paying interest, it's like free stuff.
And I think Peter had mentioned the fact that Most people don't use their rewards, but there are those people out there that are really doing well, like travel hackers, who can really maximize those cards out pretty well. So I think it's a little bit of how you're going to plan to use it. So I think we're coming.
Let me jump in there and get controversial here, okay? Because
by all means,
those flights aren't free. The money's coming from somewhere, and unfortunately, it's coming from the people who are carrying a balance. If they're carrying a balance, they're paying interest. If they're paying interest, we're sucking money away from one person to give it to another. Please don't take this as a guilt trip. It's just math. It's just math. It's coming from somewhere, and American Express and MasterCard and Visa, they're all making huge dollars on swipe fees, interest charges, over-the-limit fees, and we all think these credit card points are coming from, Santa Claus? No, it's coming from somewhere.
Well, no, I mean, you're right. I mean, they wouldn't be doing it if it wasn't profitable, if there were people out there who weren't paying out the nose for their credit card service. So you do make a good point.
No, it's like the casino. Everyone always wins.
Those credit card companies do also make money from the fees they charge to retailers too. Again, from my day job, I see how much money we pay to all these credit card companies. I'm sure they make a lot more off the interest, obviously, but
which in the end we pay for anyway, right, Tom? Like then the prices just go up by 1%. Would that be a fair statement? Do you think?
Oh yeah, we build it in.
Yeah, right. Shareholders aren't getting hit.
So not to sound too cold, but Steve, you said we should consider where all this is coming from. Let's just say I pay my bills all the time. I pay the entire credit card balance. Should I care that somebody else is paying a ridiculous amount of interest? If you're paying for my flight to Vegas, should that bother me at all?
If you're for world peace, then yes, it should bother you.
Have a conscience. That's right.
Oh no, I am in so much trouble now.
No, please don't take that as a guilt trip. That's just it's just math.
No, you're right. I mean, all this free stuff and extra protections and whatnot, they are coming from somewhere, I guess, right?
Yeah.
So this has been a great discussion. What I'd like to go around and just ask everybody just a final word on credit card use, and basically, would you consider giving up your credit card? Steve has showed us that we probably could live without it, but would you? Kyle, let's start with you.
I would personally choose not to. To me, credit, like I said, is a tool in my tool belt, and I will give the caveat in saying this, though, that much like when everyone asks, if you ever come across a study where it asks people, are you an above average driver, and like 98% of the people think they're an above average driver, I would imagine it's the same for credit card usage, where people are like, well, I pay off my credit card 10 out of the 12 months a year. Well, like Peter said, then your late fees and your interest, it's not worth it anyway. You should be using the debit card. So with the caveat, if you do not have your personal finances in order and you are ever carrying a balance on your credit card, try it Steve's way. What's it going to hurt to use your debit card for 6 months or to try using cash and the whole envelope thing? I know there's a lot of people that are quite famous that recommend it. It's not my style, but it's not going to hurt anything.
And Miranda, what's your final word?
I think we already. I think we know where I stand. I don't need another smackdown from Steve.
He's been pretty nice to you. What do you?
All right, Peter. Then we'll jump to you.
Okay. Well, I think I come down closer to Steve than probably the rest of you guys. I've gone through the whole Dave Ramsey course, and I've gone through where for several years we didn't really use credit. I do have one rewards credit card now, and we use it really sparingly. And look, the one time I use it, look what happened. I got a late fee. But here's the thing. I think people need to be very aware. If they've got problems with that, if they've got a large amount of credit card debt, they probably shouldn't be using credit cards. I think far too many people use credit cards as kind of an extension of their normal income. They think, okay, I make my income, and then here's this extra income. Instead of actually planning ahead, saving an emergency fund, and planning for the future. So I think if you have some debt problems, you probably shouldn't be using credit cards. And if you do use credit cards, be very careful, be aware of what you're getting yourself into, and make sure you stay on top of your finances, unlike I did this week. So,
thanks, Peter. And how about you, Tom? What's your stance on credit cards now?
I don't think I could do without my credit cards. There's between the convenience, responsible convenience, but and all the perks. Quite a while ago, there was a time where my wife went on a business trip, and the business was paying for her hotel, but she didn't have a credit card. Neither of us did at the time. And when she got there, they wouldn't even let her into the hotel room without a credit card. And since she wasn't paying for the hotel room, it's not that she could pay cash or anything like that. They had to get it sorted out. So it's one of the things that kind of sticks in my head of how much easier it is with a credit card. With my business, I haven't had a rewards card. I'm going to get one in the next week or so here. That is, the sign-up bonus alone on it is going to pay for my trip to FinCon, where I'll see most of you.
Yes.
So I'm just going to close here with, I think with everything we've talked about, and I'm going to put together what Steve's been talking about and what we've been talking about is, whether you're going to use debit or credit card, you have to be conscious of what you're spending on. With a debit card or just cash, you can still get in trouble if you spend it all, right? You can overdraw. You can still have issues. So you do have to watch what you're spending. If you're in credit card debt, get out of credit card debt, because then you're just paying way too much for the stuff that you're buying. I like my credit card. I'll admit it, but it's easy to get lost in it, and if you're not conscious of what you're doing with it, you can easily fall behind, and then you start digging a hole that's very difficult to get out of. So, Steve, I think we already know where your stance is. So I'll let you close with, if you could tell us a little bit about your audience, tell our audience, rather, a little bit about Money SOS and where they can find you and what type of material you talk about.
Sure. MoneyPlan SOS is the website. It's where it hosts the podcasts and videos I throw up there. It is where I help everyday Americans to pay attention, not interest. It's the educational piece of personal finance. I hope that I can just inject my little piece and help some people along the way.
Thank you so much for joining us, Steve. This was a fun conversation, and I hope it was a little eye-opening for our audience as well. I'd love to hear if anybody's opinions were swayed. Please make sure to follow us. Go to the Money Mastermind Show, moneymastermindshow.com, and you can find all of our social sites there, Twitter, Facebook. The site itself, you can comment on our articles and tell us what you think about using a debit card and cash versus a credit card. Let us know your horror stories. Let us know your successes. Also, feel free to subscribe to us, to our podcast in iTunes and Stitcher. We really would love that. And until next week, be good with your money. Good night. Woohoo!
Thanks for joining us on the Money Mastermind Show. Get more information at MoneyMastermindShow.com. Don't forget to subscribe to the show on iTunes and YouTube and follow us on Google+.